Good afternoon, everybody. We are really excited to see you all here today. Welcome to Arnhem and welcome to Accsys strategy presentation. Today, we are going to talk about reset and transformation of the company. We are also going to dig deep why our journey forward is really exciting and talk how we are going to position ourselves for the next stage of growth. Today on this stage, I'm going to have not only a CFO that you talk very often, but also the people from my senior team. Here you can see them all on the screen. So Sam Vora, you know him very well. He's with the company for a relatively short time, but he's bringing a wealth of experience coming from the different UK PLCs. Then we have John Alexander, our Group Commercial Director. He is our power behind the commercial strategy in Accoya. He's with the company 14 years already, so almost since the start. And Hans Pauli, also with the company for quite a long period, 15 years, bringing wealth of experience and knowledge about Accoya, today in the role of Managing Director of Arnhem. Then we have Dr. Pablo Steinwinkel, our Innovation and Technology Director. He's going to share with you what has been cooking in a kitchen of Accsys and share some nice view on how we are developing our technology and our products. And then we have two guests that are making Accoya great in the US today. Rod Graf, our GM of Accoya USA, and Sergio Munoz, our North American Sales Director. You are going to have here the agenda. We are going to follow it through. We will have enough time for the refreshments. There will be Q&A session immediately after the presentation, and after that we are going to have a plant tour where you are going to be divided into the smaller groups and have one of us taking you to see the Accsys Arnhem site. At Accsys, we adopted this very simple mantra, changing the wood to change the world. So let me starting this presentation by asking a question. When you woke up this morning and you looked outside through the window, did you see the world how it is or how it could be? We do believe that sustainable companies have to play one of the roles in an industry place. They are either innovator that are coming with some kind of revolution, bringing the world to the next normal. Or they are some mavericks who are extremely well in what they are doing. They're super, super efficient, creating a new trend where industry wants to go. Or you have companies that are inspiring the industry to move in a specific direction. In Accsys, we do believe that we are disruptor in the industry, redefining what is possible by taking one of the oldest, most trusted building materials and transforming it into the powerhouse of performance and sustainability. We are creating an extremely versatile product with no pair in the industry to match its durability, resistance to decay, low maintenance when a product is coated, and stability. Technology is very advanced. No one else was able to master the production process, and Accoya is recognized to its unmet performance among the peers. Today, Accoya exists in 3 product ranges, Accoya, Accoya Color, and Tricoya, and they are used for production of windows, doors, decking, cladding, You can make bridges out of it, you can make external furniture, etc. We are guaranteeing performance of our product 50 years above the ground and 25 years in the ground or in the water. It is low in maintenance, and it is replacing a carbon-intensive materials like concrete, like glass, like metal, or some other less sustainable wood sources, like a hardwood coming from Brazil or south of Africa or Far East. We are proud owner of major certifications and accreditation in industry. With Cradle to Cradle Gold, we are specifically proud of. We also receive accreditation of Cradle to Cradle Platinum for the material health. Having said all of this, we are very proud to share with you a video where we are actually showing how our products are shaping sustainable construction industry today. So let's see it. So we would like to inspire the world to build smarter and live better. And we are certainly providing a choice to build sustainably. Talking about sustainability and ESG in our story, we naturally, wood products are contributing to the better world, so to say. So trees are capturing carbon from the atmosphere, and then because we are building the product and using a product for 50 or more years, in that period of time, you can bring actually and grow 2 other trees to be to the full size. So you are growing 2 trees while 1 is in use. So our product is basically carbon negative. In the time that Accsys is existing, we have captured 450,000 tons of carbon dioxide, which is equal to the emissions that city like Amsterdam or city like Manchester will produce in 1 year. Beside the ESG footprint, we also believe that Accsys have a unique value proposition combined with a very high barrier to entry. Company owns IP on a genuine premium product. You have many products in the industry that are claiming to be innovative. Our IP is a genuine premium product with a low maintenance cost and very long durability. We have a recognized brands with all Accoya, Accoya Color, and Tricoya. We own 27 patents across 45 countries, so more than 300 patents across the world. And we have established manufacturing footprint in our core markets. Now, knowing how much capital do you need to actually build those plants, having established manufacturing footprint is certainly seen as a high barrier to entry. The company passed its peak investment, and our technology is also IP protected. Here we are referring to some numbers from FY24, which was last year. We have recently upgraded our FY25 expectations for this financial year, and we are working very, very hard to deliver that. We are trending well on a top line and a bottom line, and working to continue to keep that trend until end of this financial year. Looking, what do we have today with assets? We have 3 production locations. Arnhem is our largest site with a capacity of 80,000 cubic meters. We have Accoya color production in Wales, and we have Accoya production in Tennessee, Kingsport, which is a joint venture between Accsys and Eastman Chemicals, where Accsys is owning 60% share in the joint venture. Accoya USA is our latest asset that we built. It is operational, commercially operational since September 24. And North American asset is focusing, delivering Accoya and winning locally. And Arnhem is focusing, delivering Accoya and winning globally. Accoya color is produced only in Barry, and we are supplying Accoya color to the world from Barry. As of today, we see very strong prospects from our business in all regions. Arnhem and Barry operates today at a gross margin that is at 31%. Arnhem operates an EBITDA margin that is 17% this year. We are not planning any further massive capital investment after finalization of Reactor 4 in Arnhem. And Kingsport, at the same time, is replicating technology that we are having in the Netherlands. Plant has been up and running now for the 5 months. And we do have space in Kingsport, and you're going to see it later on with Rod's presentation. We do have a space in Kingsport to add additional 6 reactors if it proves to be needed. Both plants have enough space to basically facilitate the growth in the next coming years. So we are not really seeing adding any significant capex in the coming few years. Now, talking about our markets. We see a very large growth potential driven by our megatrends. And when we talk about megatrends, we are talking about urbanization and population growth, housing shortages and aging stock, and sustainable construction and biophilic design that is becoming very popular in recent years. Even though construction market in the last few years was not really being the most stellar in the industry, with given all the high interest rates, etc., construction market is still growing, and it is expected to grow between 4% and 6% globally, with some region growing faster, like what we are seeing in the US that goes up 8%. In addition to this very large growing market, our addressable market is sizable, with our current market share being less than 1%. It doesn't matter really in which region you are looking. In some of our core markets, like for instance UK and Ireland, where we are present for a very long time, that percentage can be slightly higher, but it is still remarkable amount of addressable space available for us for the future growth. I will let John to basically elaborate this later on in his speech when he starts addressing you. The focus of today is the future. Nevertheless, we wanted to show you that our company was growing over the last years and yet is to reach its full potential. Over a long period of time, the company was struggling with the availability of the product, and demand was surpassing its supply. In the last 20 months, we doubled the capacity across the region by adding 1 reactor in Arnhem and 2 reactors in the US. We clearly also have expressed our ambition to deliver 100,000 cubic meters volume on a run rate at the end of the financial year 27, at the same time improving profitability and returns. Since 24, company is cash generative and will also continue to show strong performance in this financial year. Now, looking at the last 18 months since I joined and the big hurdles that we had to navigate with the Hull being unfinished, Kingsport being incomplete, we do believe that simplification of the company with improved financial performance, de-risking in a capex exposure to the large investment, completion of our Kingsport plant and decision on how, Accsys is reaching the inflection point. A significant strategic, operational, and financial progress has been made and is positioning us for the stronger growth. In the last 8 months, we basically spent quite a lot of time working on refreshing the strategy, not only with our executive team, but also with our board. And we came with a strategy that we called Focus. It is transforming Accsys to be fundamentally strong, more operationally efficient, more customer-centric, united, safe, and sustainable business. By fundamentally strong, we refer to continuous progress on financial and operational targets. We have shown progress lately, and we will continue to build credibly. Operationally efficient is about bringing the plants and our processes to work what I like to call a Swiss clock. We have launched a solid route program in Arnhem, and Hans is later on going to elaborate also on the efficiencies that has been delivered and we are expecting to be delivered in the near future. Customer-centric is a story of growth. As a premium product, you want to deliver and keep delivering premium service and premium experience to your customers. United team of highly professional people is there to execute. We are all performance-driven and have strong passion for the company and for the product we make. And finally, safe and sustainable in building that future. You saw maybe the RNS this morning on a strategy stages. So we are dividing our strategy in 3 defined building blocks or 3 defined stages. First phase that started basically last year, and it is going to be until end of financial year 27, is focusing to maximize returns and cash flow from the existing asset. It is reinforcing our fundamentals, including reduction of debt and optimizing our capital structure. We have ambition to grow, as we already communicated, 100,000 until the end of this period. This phase will not require any significant capex to be delivered. We have doubled, as I said, in capacity in the last 20 months, and we have enough to basically grow fundamentally from here on. At the end of this phase, company will be increasing profitability, utilizing 85 to 90% of its capacity. It will be refinanced with a strong operational model and ready for the next stage of continuous improvement and growth. Second stage is all about getting all the plants to the maximum nameplate capacity, extracting the efficiencies with the minimal investments. We do expect that Accoya color is going to be produced in the US, given a very strong demand for this product today. So making the footprint optimization with Accoya Color will certainly be the focus in this period. We will also stay laser focused on reduction of the debt. So that is also going to be one of the priorities. Executing phase 1 and phase 2, company will be in a position to fund future growth. We expect it is going to be in the US, given the size and profitability of that market. We have space in Kingsport to build new reactors, and we assume that probably if they come, they will come in pairs. So those are the 3 phases of our focus strategy, and in order to build on them credibly, we are also going to put the targets for the FY27 and FY30 that we as a company, as an executive team here, are committing to deliver in this period. For the FY27, as I said, we are targeting to deliver 100,000 volume on a run rate, which would be broadly doubling the volume from, if you like, 20 months ago. We have increased EBITDA, so increased profitability to 12%, from last year 3.5%, and this year probably in the range of 6.9%, keeping the pricing discipline and keeping our gross margin on a target we already communicated before of 30%. We are also targeting to deliver 75% of cash flow conversion from the operations. For the FY30, we increased the volume targets to 120, so that means both plants are completely full. We are more profitable, so the EBITDA target is around, it's on and above 15%, with keeping the gross margin and operating cash flow conversion on a good level. Now, I am here to communicate these targets and to tell you broadly what we are doing. I have my senior executive team that is going to go into details on how exactly we are going to do this, and to also help as a team to build credibly on our story that we are trying to tell today. So, having said all of this, I wanted to leave you with some key messages from my side. Accsys does have a genuine, innovative product and technology. We have a very large addressable market. We do have a pricing power, and we have established our local presence, manufacturing presence in our core markets. Company past peak investment, providing substantial return on capital investment opportunity going forward. Stabilizing and de-risking the business is making us more profitable. And being leaner and less complex, together with the good results from this financial year, the company is reached its inflection point. Last and not least, we have a very capable talent across the organization to deliver on this plan. So with this, I will invite our CFO to take the stage.
Thank you, Elena. Good afternoon, everyone. My name's Sam, and I'm the CFO of Accsys. I've been with the company for 4 months now, and it's flown by really, really quickly. And really, I wanted to sort of tell you about my initial observations about the business and my experience of working from Accsys. And it really comes down to 2 things, which you're going to hear quite a lot more about this afternoon from my colleagues. First one being product. And really, honestly, we do have a fantastic product. The Accoya product, and Tricoya as well, really great product, unrivaled in the building materials industry. And then people as well. You're going to meet members of the leadership team here. some members of the middle management who are going to be, walking around on the tour. But we have over 200 passionate people in this business in London, in the Netherlands, in Wales, and also in the US. And when you've got a great product and great people, it's a recipe for success. So really what I'm going to do is talk you through the finance slides and elaborate more on the targets that Yelena has just mentioned. So you heard from Yelena about volume and how that's grown over the past few years. We now have 4 reactors in Arnhem, and through our 60% joint venture in Kingsport, we have a further 2 reactors operating. But in Kingsport, we have space for 6 more reactors to be built in time, should we choose to do so. So really, as we look forward, our strategy is on operational excellence to deliver those nameplate capacities of each plant. So as we look at the end of FY27, we're looking at delivering 100,000 cubic meters of sales, of which about 70 to 75,000 will be coming out of Arnhem, and 25 to 30,000 will be coming out of Kingsport. And then when we go ahead to the end of phase 2, at the end of FY30, we're looking at 120,000 cubic meters of volume, with 80 to 85,000 coming from Arnhem and about 35 to 40,000 coming from Kingsport. And then as we start to think about revenue, since financial year 21, we've grown our revenue at a compound annual growth rate of 11%, and that was really driven by pricing, mix, and increased volume. And as we look forward, revenue growth is driven by volume growth, geographical diversification, maintaining that high premium selling price, and also innovation with new products. And you'll hear from John and Pablo, who are going to talk a lot more about that later. So as we think about the end of phase 2 of our strategy, what could revenue look like for the group? Well, we're expecting revenue for Accsys to be about 230 million revenue, with a further 60 million coming from the joint venture, and that 60 million is at our 60% share of the revenue. So broadly looking at it combined, about 290 million. For Arnhem, that is an 11% CAGR to go from where we are from FY25 consensus to FY30. So that 11% is bang in line with what we've achieved in the last 5 years. And then it's 14% as a whole, and that's really because the US is growing at a much faster rate than Arnhem as well. And then really by focusing on operational excellence, stable and reliable production, we expect our gross margin to be maintained at least 30%. Hans will talk about the Solid Roots program and how that relates to OEE. And we're in the process of implementing a number of Lean and Six Sigma programs to really drive that operational efficiency. But like any other business, we are subject to input cost inflation. Our biggest costs in the business are raw wood from our sawmills from New Zealand, anhydrite, the primary chemical used in acetylation, but also other costs with logistics partners and our direct labour workforce. And we'll be looking to optimise these processes and costs as part of this strategy. And really thinking below gross margin, we really do have a very tight focus on overhead control. So we are looking for our SG&A costs below gross margin to be reducing year on year as a percentage of revenue. And also we are on track to deliver the 3 million euros of cost savings that we previously announced from the transformation programme undertaken just over a year ago. So through the strategy of increasing capacity in Arnhem and Kingsport, driving revenue growth, and through our operational leverage, this really drives EBITDA growth for the business, and really importantly, sustainable margin progression. Current FY25 consensus is around 10.5 million euros, but that includes the loss for the joint venture in North America, which only just started a few months ago and is still in its start-up and ramp-up phase. And that loss will be approximately 5 million, our share of it. So the margin for this current financial year, based on consensus, is just under 7%. But actually, if you exclude the joint venture, we're actually closer to 11%, which is comparable to what we've done in previous years. But really, as we think and look to go ahead to FY30, we are able to increase our returns without any significant increase in capital employed. So in FY30, I would expect EBITDA coming from Accsys, excluding the joint venture, to be broadly around 40 million euros, and the share, our 60% share of the JV EBITDA, to be about 14 million euros, and that would yield a margin, an adjusted margin, in excess of 15%. But really, what does this mean from a capital allocation perspective? Through a disciplined approach to working capital management, we expect to see a strong conversion of EBITDA into operating cash flow, and hence are targeting a cash flow conversion rate of at least 75% for phases 1 and 2. We have low maintenance CapEx spend over this period of broadly around 3 to 4 million, of which most of it relates to our annual maintenance shutdown of the plants. And there's no real significant growth CapEx in our plans for the next few years. Nothing more than maybe 1 or 2 million in any individual year. So really, through this positive free cash flow, it will really quickly deleverage the balance sheet. So what does this mean for overall net debt and liquidity? When we execute our strategy, this will really drive a significant increase in operating cash flow. We're going to be growing our EBITDA through operational excellence, and with a focus on balance sheet efficiency and capital allocation, we will deleverage through organic growth. And hence, we are expecting to be net debt free by the end of FY30. And by doing that, it will really give us significant financial headroom to fund any phase 3 growth opportunities that we're looking at. In the medium term, I'd expect our return on capital employed to be greater than our cost of capital, or our WACC, which is currently about 15%. And then there's the opportunity for that to increase nicely beyond that thereafter. And at the same time, I would expect our WACC rate to reduce as we deleverage. But really, for myself, Jelena, and the executive team, deleveraging is our #1 financial priority. So thank you, and I'm looking forward to taking questions later on in the session. And with that, I'd like to pass on to Dr. Pablo Steenwinkel, who's going to talk about innovation and technology. Thank you.
Thank you, Sam. Thank you, Sam. Dr. Pablo Steenwinkel. Interesting. Welcome. I'm going to tell you a little bit in the next couple of minutes about what we've done so far in terms of innovation, how we were able to protect it, and how we're going to continue. By the way, the building you see there is the first net zero Lidl building built in Almere, and the cladding on the side is made out of charred Accoya, treated with fire, basically. So moving on, I'm going to stand a little bit here. So actually the first publication on acetylation of wood was already dating from 1928, but only until early 2000. It was only up until then when it became more economically viable. And that is when Accsys was started. So in 2007, we built reactors 1 and 2, firstly as a demo factory, as Hans will explain, but eventually now with reactors 3 and reactors 4 up and running, a mature production site. And in 2024, we installed reactors 1 and 2 in North America, which we will also hear later. And in that meantime, we have done a couple of things in product and process innovation. Of course, the launch of Accoya in 2007, commercially, and Pretty fast after that, in 2008, we introduced finger-jointed Accoya. Finger-jointed Accoya is basically based on short lengths that have been created in short lengths because we buy a lower grade of wood that has all kind of knots and defects in there. You cut the knots and defects out and you glue the parts together with a finger joint, vingerlassen in Dutch. There are some examples in the back of the room that you can have a look at later. In 2011, we introduced Accoya for Tricoya, MDF, and actually I was flabbergasted when I joined 4 years ago to saw a piece of MDF that had been laying around in a test field in wet conditions on the ground for 15 years and nothing happened. Now, everybody has played with MDF in the past, maybe as a hobby, left a little piece of MDF outside in the rain, and it suddenly overnight becomes twice as thick, and it becomes like a sponge. And this was really solid like a rock still after 15 years, so tremendous. Later on, so pretty recently, we launched Accoya Color, through and through colored with a pigment. And in 2024, we launched laminated Accoya. You will also see examples of those, or samples of those, in the back of the room. Sorry. And in the meantime, we have introduced a profiled version of both Accoya as well as Accoya Color. Now, since 27, since we had reactors 1 and 2 up and running, we have been continuously looking at how can we shorten cycle time and maximize the output out of our reactors by two things. Basically looking at production cycle times themselves, see if we can shorten it, and we have been pretty successful there, roughly taking 40% of time out, which is great. And there is still some opportunity there. And also in terms of batch reactor volume utilization, we were able to increase that by 15% over time in that time frame up until now. And also there we see some further opportunity for improvement. Now, we're very proud of our technology. It's pretty unique, it's advanced, and so you want to protect it. And we protect it in two ways. We protect it by just keeping our trade secrets to ourselves, but we also protect it by writing patent applications around the technology that is new, because that makes us interesting as an investment partner, interesting as a joint venture partner, and it makes us keep the technology for ourselves and keep competition out. So in the brown area, you see anything that is related to the Accoya manufacturing process itself and how we protect it. There's a couple of patent applications there, running over a pretty long time. Recently, with the invention and introduction of Accoya Color, we've also been able to protect that technology. Tricoya panel manufacturing, a separate unit, really for the manufacturing of Tricoya panels out of Accoya wood or acetylated wood. We have a couple of patents running there. The Tricoya process, which is basically making use of any wood element that you acetylate, so not necessarily a wood board. And a couple of secondary processes. As you know, our side product is acetic acid, and that requires some workup technologies, and those are the things that are covered by those patents. So, as Jelena already mentioned, we have protection in 45 countries by 27 patent families, so over 300 patents in total. And we're continuously in search of new technology, new patent applications, either by brainstorming or as a result of projects. And that makes us interesting because by that way we continue to protect our business, we remain a high barrier for entry for competition, and we remain an attractive licensing partner. Moving on and looking into the future, again with a reference to the focus strategy that was mentioned by Jelena, we will continue our innovation efforts firstly in wood, additional wood, just to expand our wood basket and also to diversify a little bit into the wood appearance that you see. So we are continuously looking at wood coming from various parts in the world, plantations, FSC certified of course, because sustainability, the S of focus, is part of the job. Fire retardant, of course nowadays extremely important. We're working with partners to produce fire retardant Accoya and to bring that onto the market globally with a continuously changing legislation, and that is a very important aspect of our business to stay on par with other wood building products. And we have some good examples there. We recently had a project spec'd in Accoya fire retardant impregnated in Norway, in Bergen, And we have a WUI pass, which is Wildfire Urban Interface application of building products, and therefore also for Accoya in North America, a very important milestone for us. Then the Accoya Color product range, we will continue to invest in that, both in terms of profiling, being able to offer finished products, as well as in looking at other colors. We're studying, for example, brown, because it's a very popular product. A little bit of our time is spent in veneers, and that is interesting. We have one commercial agreement already with a European, Latvia, veneer company, a plywood company, I should say. They use only the top layer of plywood, multiplex, as an acetylated wood veneer, and by that they can use that material for concrete forming applications, where the concrete really ends up to be having a very nice and smooth surface, and the material can be reused. And that's a really big advantage of having acetylated veneers. And finally, as I already said earlier, we're going to continue we're going to continue to innovate in terms of our process. We're going to look at further cycle time reductions and reactor volume optimization, just to be able to lower our footprint as well, with some energy efficiency efforts that we'll do in that area. So in summary, we will continue to disrupt the traditional wood market with our new technology and innovation through product innovation, process innovation, patent applications, and hopefully by that we remain an interesting partner for product innovation. That's what I wanted to tell you. I'd like to hand over to my colleague Hans.
Thank you, Pablo. Right, my name is Hans Pauli, and I think most of you know me in various roles, and to be honest, I'm made full circle back to being the site manager of Arnhem. The next 10 minutes or so, I'm going to tell you a little bit about where we are today, what our plans are, how we're going to get there, and also what really our ambition is to 27 and 30 and beyond. So where are we today? As we already told, 80,000 cubic meter production capacity split over 4 reactors. Today, being actually financial 2024, we produce about 56,000 cubic meters. The EBITDA margin we are achieving is 17%. Now, that is 70%, but if we really look at what we're doing in the plant in Arnhem, because this is the EBITDA margin of the legal entity Arnhem, we're actually doing better because the costs associated with our R&D and engineering team are part of the entity, but obviously not necessarily part of the production unit. So actually, our business case for an Accoya plant is better than the EBITDA we're achieving today. This volume we're producing with about 150 colleagues. 2/3 of them are working at actually producing Accoya, and the vast majority of those colleagues are working in 5 shifts, 365 days a year, including Christmas, New Year, Easter, etc. The rest is about 20 people working in engineering, reporting into Pablo, R&D reporting into Pablo, and engineering, which is reporting into the production manager. And then we've got 30 people working in various support functions, being supply chain, customer service, finance, HR, and general management. Arnhem is a true innovation hub for the company. Besides the plant, it started off originally as a pilot plant rather than a true production plant. Nowadays, we're definitely a mature production plant. But we also have a small experimentation unit, which we call MP3, Modification Plant 3. And there we can test new species, we can test new ways of acetylating wood, so that's really a small unit. And furthermore, we do have a lab, and you will see that lab later on, where we do largely chemical experiments, chemical testing, but also some strength testing of, for instance, Accoya and other species. So that's our innovation hub. We've got more than 15 years experience with our logistical service providers, Hoovers, who have been very flexible. They've been outside our building, inside our building, and with the latest change we made, we pushed them outside, and they built a dedicated 20,000 square meters warehouse for us, where we store about 25,000 cubic meters of raw wood and Accoya, which represents roughly 4 to 5 months of production. We already mentioned earlier solid root. How do we make Arnhem in particular, but also Kingsport, work like a Swiss clocks? Of the focus strategy, 2 elements are really essential for Arnhem and Kingsport for the production. How do we become operationally more efficient, and how do we produce safe and sustainable Accoya? I won't dwell too much on where we are today. I'll look forward. Our path forward is built on 3 pillars: people, process, and systems. People has got largely to do with safety, a journey to 0 LTIs. And LTI stands for lost time incidents. Obviously, we want to have nil. How do we try to achieve that? The key word there is training, 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 and more training. Not just for people who join, but regular training for each and every employee. The other pillar to work on there is improving our processes, improving our equipment. And that really goes about using our engineering skills to make the plant safer to work in and safer to maintain. Going to the next bullet, a 20% increase annually. This is counted from 2024, so if you go to 70,000 cubic meters, that's about a 20% increase of our annual production volume. We do that through a number of steps: being more efficient, producing better, applying the new inventions, new technologies Pablo and his team developed. These all have to be introduced, and also training is there a part of. Another one which is important is reactor reliability and availability. I won't dwell too much on that, but if we look to OEE mechanical improvements, i.e. up by 25%, OEE stands for overall equipment efficiency, i.e. how well do you work with your equipment, and can you actually reach that 100% level? We do that through a number of ways. And if we look at the stacker, which is the largest mechanical part we have, we do that through training, again, training. We do that by appointing a single employee per shift to have some mechanical and maintenance experience, so he can do quick fixes if something breaks down for whatever reason. That's another one. We are introducing better systems. You'll see later on when we do the tour that we've got what's called a golden eye. And a golden eye is basically a way to test the quality of the material. Today, we largely do that with the human eye. If you want to increase the speed, we have to use modern equipment. The golden eye is a piece of equipment we can use there. I'll go in deeper detail on supply chain and on end-to-end quality in my next 2 slides. And finally, a 15% decrease in conversion costs. That's being achieved by economies of scale, obviously. Smarter systems we can use, lower stock volumes, i.e. in the month, so how many months of material do we have on stock? And finally, first time right. First time right is crucial to be very efficient, and that's where we are also focusing on. I try to keep this slide simple, but I guess some people may disagree, so let me try to unpack it. When we order wood, if you submit an order to our mills today, it will take them about a month to cut it and to dry it. Thereafter, it takes about 2.5 months to bring it to Arnhem, or a month and a half to 2 months to bring it to Kingsport, it's closer by. And thereafter, the magic at Accsys starts. We get it in, we start to stack it, then dry it, then acetylate it, then destack it, and then it goes off to what we say hoovers, and then ultimately to our client. The drying we can either do in-house or we do it externally. A lot of it we are doing externally. That takes more time, but we simply do not have the capacity inside, and we don't necessarily want to increase that capacity either. We've got a very good relationship with our external wood drying companies. Let me try to dive in a little bit further and tell you what we're trying to do here. Secure access to long-term suppliers. That goes for both wood as well as for silicon hydride. We've got 24 mills, either in New Zealand, in Chile, or in Southern Europe, providing us with radiata pine or derivatives of it, basically all pines. With some, we have long-term contracts with a certain minimum, and above that minimum, we can order more. So we've got a secure base, a secure volume, and on top of that, we can quite easily expand. So they're flexible, grow with us. We've got about a handful of manufacturers for silicon hydride, suppliers of silicon hydride, who actually store their volume in about a circle of 100, 150 kilometers for Arnhem, so we've got quick asset to it. So that is also helps us, and also there we have minimum agreements, so we also secure with volumes. It still requires quite some management to get that actually all completed. The next one, investing in technology and operating systems. There, just taking one example from the mill, how it comes to us. We've recently introduced software which allows us basically to upload the data from the mill straight into our system. So we've got a much faster access to that data. We've got much fewer errors, because otherwise it had to be keyed in manually, which allows us to have a more reliable and an earlier sight of what material is coming, so we can start planning earlier. And if we can plan early, we've got a higher level of reliability. So it shortens our timelines, and also that has an effect on a warehousing need. Another one is the golden eye. The golden eye, you have to see that basically as a Röntgen system, an X-ray system through which we feed the wood, and they then scan it immediately and tell us what the quality of that material is. Finally, end-to-end thinking. End-to-end thinking is very important for a good quality. So we've got set rigorous standards for our mills, for our quality, A1, A2, and B quality. What is A1 quality? It's without any fault. No nuts, no resin pockets, nothing. So that's the first one. Then loading instructions into the mill. How do we handle it internally, and how do we ship it then out to our clients? That is end-to-end thinking, and that's the way we believe we can give our clients the experience they expect from a superior product like Accoya. So before I hand over to, actually, I'll send you for a cup of coffee, a few takeaway messages. A solid profit base. I mentioned 17% EBITDA currently, and we can push that up simply by scale efficiency, simply by doing the things the first time right. Our nameplate capacity today is 80,000 cubic meters. We are not producing that today. Going there is quite easy, doesn't need any capex. We actually can go beyond that with incorporating the new developments. Pablo and his team are working on that. So we believe that we can actually push it to a virtual fifth reactor, i.e. moving it up from 20,000 cubic meter per reactor to 25,000 cubic meter. Will not need significant capital investments. We've secured a good supply of material, both wood and silicon hydride, as I just mentioned. And finally, Solid Root is a program, a project you could call it, which brings every improvement together, makes us more reliable, increases the availability of the plant, and makes us more profitable. And with that, I believe I'll send you up for a cup of coffee. Thank you.
Well, hello everyone. Hello. Looks like everyone's back. So I'll just move on. So my name's John. I'm going to talk through the commercial program that we have at Accsys. And my background in coming to the commercial world was starting in R&D, working for the largest window and door manufacturer in the US, constantly looking for ways to make wood better, starting in about the year 2000. So belief in the Accoya product at my side is deep, very strong, and I'll avoid talking about that. I think you've heard a lot about Accoya. Some of you are quite familiar with it. It has a very strong performance level, and it also has a value. There's a value to the performance it brings. And our role in the commercial group is to bring that value proposition to the market. and really make sure that we create the momentum for growth. And I hope through what we talk about this afternoon, you'll be able to get some insight into that. Before going on to the slides, we'll show photos of projects like this residential building in Germany. The product we make here in Arnhem is rough timber, some of you will have seen. So a big part of the commercial team's effort is bringing that rough timber through to projects such as this, along the steps in the journey where we depend on our partners, and we'll talk through how we develop those partners, the types of partners we look for, and how we build momentum in their sales channels. Accoya and the performance credentials it has makes it suitable for a really wide range of applications. Not just types of building, residential, commercial, hospitality, refurbishment, but also the applications within those buildings. So you'll see in examples here, Accoya being used for cladding, windows and doors, and shutters. There's a really wide range of applications, and we'll look at those in a bit more detail in a moment. The next slide, we just want to introduce the second video of the afternoon. It's a representation from an architect group in the northeast of England who have used Accoya in a way which we feel really exemplifies what performance means for a natural material. The Accoya they'll talk through has been used in a commercial retail development, and critically, it was initially used in phase 1 of the development, and then 5 years later, when they want to move on to the second phase of the development, they've been able to use Accoya and have that matched performance, which is quite unique for a natural material. So we'll just move on to that video now and hear it in their own words.
The objective on the design for this retail park was to provide something of real high quality with an aesthetic difference to a typical commercial development. The initial concept for this project was to clad the buildings in timber. Picking up key challenges of the warranty and the tenant specifications really kind of led us down the route to choose Accoya.
As a product itself, Accoya is great for us because it opens up a whole world of opportunity which normal timber kind of fails on. So when we're talking to clients, whether that be residential or commercial clients, about what this product is going to look like in 5 years or 10 years time, specifying something like Accoya, you know it's also going to be aesthetically the same in 5, 10, 15 years, but also you're not going to get any of the discoloration or twisting or movement within it. So it's basically peace of mind for us and the client who we're installing it for.
Phase 1 of the retail park was completed 5 years ago using Accoya. Phase 2 is just being completed this year. It's clear to see there's no difference between the products applied to Phase 2 recently and to the timber applied 5 years ago. It's weathered really, really well and looks brand new when it was fitted. On this particular retail park, we chose to use a natural colour because the environment is semi-rural, being in North Northumberland. So it was key for us to use a sustainable product, something that would look a bit more natural in the environment.
We would definitely recommend Accoya to other architects, purely down to the fact that it opens up a whole world of specification for natural timber products in a commercial environment where historically it's been incredibly difficult to get warranties or peace of mind during kind of specification and ongoing install to satisfy a commercial client.
We would certainly use Accoya again in the future. It's fantastic as a commercial architect to have a product like this, which is sustainable and natural, but can be used in a commercial environment.
Well, yeah, hopefully that gives a bit of insight into how performance meets reality and provides benefits to people involved in regular projects all around the world. We'll look on this slide at how Accoya is split in two ways. Firstly, the types of product we make, and secondly, the applications it's used for. So here we have a pie chart showing the 3 product types that Yelena and the colleagues have mentioned, based on revenue, share of revenue of our sales. So the largest part in revenue is the regular Accoya product. Tricoya we have represented here we also call Accoya for Tricoya. That's the raw material that we produce here in Arnhem for sale to our 2 Tricoya panel MDF partners in Spain and Ireland. And they're converting Accoya into Tricoya panels for sale into Europe. And then the third category introduced, as Pablo mentioned, in 2021 is the Accoya Color product, which is showing a segment there of revenue which outstrips its share of volume. It's our highest priced product and one that we're working to develop and expanding the production capacity in Barry to do so through minor adjustments there in the process and work ethic, force. In the second pie chart, we show here the applications of Accoya, and there are 3 of the 3 larger segments are cladding, decking, windows and doors. The largest of those being windows, and then there's another category which is catching everything else, which is a really broad range of applications that you can use a high performance in terms of durable, dimensionally stable, and providing long coating life on a wood substrate. And they range from children's playground furniture, oyster farms, to boats. Within those 3 main categories, the decking, the cladding, the windows and doors, we've found that as the business has developed, they've been, or each regional market has developed a larger position in one or other of those. And we feel that puts us in a strong position now, and we're seeing that growth of, for example, windows in North America, which have traditionally been a very large use in the UK. So that experience and track record is allowing us to leverage growth in additional market areas in our core regions. We now look on to just talking about the regions and our core regions, how we see directionally the sales volume growing towards that 100,000 cubic meter run rate at the end of FY27, which has been mentioned. So the UK is our most established market, and within that, we still see good opportunity for growth, both within the predominant market application that we have of windows and doors, but also in bringing in additional opportunities through cladding and decking. North America, in wider Europe, that's going to be subject to a steeper curve of growth than in the UK. We feel in mainland Europe, and we'll go into this in a little bit more detail in 2 slides' time, we have opportunity to grow the breadth and depth of our market penetration in terms of additional countries, to take on Accoya distribution and deeper distribution coverage within some of the countries we're already present. North America, you can clearly see, and as was mentioned, the most significant market growth program we have. And Sergio will go into that in more detail towards the end of the afternoon. Rest of world, most significantly for us, is quite precise in terms of Japan, Australia, New Zealand. And we're working to grow in each of those countries and also develop new opportunities in wider countries. The Accoya for Tricoya business has grown steadily over the years, and we expect that to grow further. In addition to what our panel partners are selling in their own markets in Europe, we're also, as some of you may have seen in our financial reports, now purchasing panels from those companies for sale outside Europe. So we're selling Tricoya panels in the North American market through our existing commercial team, and doing the same through the Asia Pacific market, predominantly Australia, New Zealand, Japan. So now that's talking to the markets and where we expect to grow. Of course, we operate in a very competitive market and landscape with amongst other wood products. And we've looked here at 3 different categories linked to those main applications, that windows, cladding and decking, and a focus on those based on the markets where we have the largest presence in that application. And each of the charts, I'll just focus on the one on the left for the North American cladding example. We have the performance of the product shown on the bottom axis, the horizontal axis, and the price of the product shown vertically. And you'll see the common characteristic here is that the Accoya performance stands quite far out on the right against the competition. There are groups of competitive products. There's the light yellow group, which are modified timbers, softwoods, and occasionally hardwoods, which are put through a modification process. There's also the durable hardwoods, often tropical, which are in that category also. And in terms of price, there's sometimes an impact there on the appearance of the product. So some hardwood products have a higher price based on their appearance. For all of these applications, the key job that we have to do is bring forward not just the performance credentials, but the type of benefits that that performance credential can give a project, as we've just seen in the retail park in Northumberland. Just moving on briefly, in Germany, we have the decking examples with a similar position to the siding and cladding. Windows and doors tends to be a much more traditional timber industry focused on tropical hardwoods. And in those categories, you see there's lower price points, also lower performance. And in each of these applications, we feel amongst many, there's one standout feature which helps carry the product of Accoya through in that application. In the next slide, we're going to look into each of those applications a bit deeper and look at, okay, we make Accoya, other people make tropical hardwood. That's a unit of raw material. How does that relate to a finished product? So how does that relate to a window which somebody produces in a factory and will eventually go to a home? How does that relate to an installed deck? And then, of course, how does that relate to the value proposition? So in this slide, mentioning the window, the cladding, the decking examples from the left to the right, we keep the focus on the markets where they're most established. So in the UK, we're focusing in on the pound cost to build that window. For cladding, we're looking at the dollars per square foot of installed cladding. And on the decking category, we're in Germany, and we're looking at the euros per square meter for that installed deck. And if we look at the pie charts on the left, we have a build-up of 4 main elements for a window. And then that flows through to the other applications. So in a window, the main components are the wood, the ancillary products such as glazing and hardware, then moving on to the actual manufacturing costs, the cost of operating that plant, the capex involved, and then finally the coating of that product. So you can see they add up. The green 206, that's the Accoya value in that window. And then for comparison, the 107 in the dark brown, that's the tropical hardwood in that window manufacturer. You'll notice that if you move then through the segments, the costs for each of the operations beyond the wood are slightly different. And that's through the benefits Accoya brings to manufacturing. Accoya is a much more uniform, easier to work, and reliable timber than tropical hardwood. So that does bring benefits through in the efficiency at the factory. And as we looked in the previous slide, Accoya standing far out on the right of the price points. When it comes through now to a finished application, you see the percentages in windows most significantly where there's a big share of ancillary products and coatings, more intense manufacturing, but also carrying the same principle through to cladding and decking. The premium for that performance is much less than the premium for the raw material itself. That's not to say it's simple. Often these type of products are installed on a project towards the end of a project when budgets might be tight, when value engineering may come in, and of course then reducing raw material costs is a way for the project to stay on track. So in our work, as we go on to now more of the commercial model, we have to be very focused on not just creating awareness of Accoya and creating some push behind that, but also really giving a solid understanding of the benefit so that when value engineering comes in, Accoya remains in that specification where other products may not. So this is how we've simplified the view of our commercial model. And we start on the left-hand side Accoya leaving our factory and going to one of our distribution partners. And finally, on the right, over to the architect specifying a project. So talking through each step and also focusing on which we feel is our difference maker, which we feel is critical for us to get right. Distribution partners are our real foundation. We work very hard to identify partners who will be long-term, who are financially capable in order to stock large volumes at their cost locally and distribute that material, whether it's in Australia or closer to home in the Netherlands. We're looking for distributors who have very good sales teams, who are involved in specification sales themselves, who are involved in developing new paths to market for new products. And within those paths, of course, we're looking for distributors who can access the higher end markets. And partner is the right word to use. We're looking for distributors who will be in the business with us for the long term, and that's quite common amongst our customers. The second area now is in the primary focus area, and we say primary because it's the primary demand in our mind. It's where we have to create that primary demand for Accoya, which is then served by our distribution partners. And that comes both from a push and a pull side. The push that we're looking for is for work that we do with retail lumberyard specialist outlets of wood and manufacturers approved by us who are the real experts in their categories, the real trusted advocate and the trusted voice in their categories. We want them to have the positive experience and confidence in using Accoya so that when they're asked for a wood window, Accoya is what they're recommending. And when they approach or when they receive a price objection, they can explain why Accoya has that value proposition. So that's our push to the market, and we focus very heavily within our sales team on developing that area of the market and working hand in hand with our distributors to do so. And the major effort we have on the pull side would be with architects. So we have programs all regionally specific and slightly different, but in our core markets, and particularly in the US, in the UK, in Germany, where we're creating that pull side through architect training, and every day we'll be training at least 2 architect practices in Accoya in our core markets. And that creates the pull, which is then met by the ability to supply. It was a very frustrating aspect in the early years of Accoya where we'd create interest with an architect, and then the next thing we'd hear would be a year or 2 later, and they remembered Accoya, but they weren't able to find it anywhere, and they moved on with their lives. So creating that link between availability and interest has been very key. So we focus the majority of our commercial activity in those sectors and work to get right the partnerships of our distribution. Now we'll look in the next slide at how we approach that in the different core markets which we're in. We're at slightly different stages. Each market has a slightly different structure that we apply the broad principle to. And we'll look at the key points of that now. So I mentioned a moment ago, my colleague Sergio will be covering North America in more detail. So I'll just look here at the rest of Europe, UK and Ireland, and then the rest of the world. So if you remember, we have the 3 tiers. We have what we've said here, direct. That was the first tier of distribution. The indirect, that's our one of the 2 real primary growth areas that we work towards, the manufacturers and the specialist retailers, and then finally the end users. So across Europe, if we stick with distribution, on the mainland, we're looking for increased coverage. Excuse me. We're present in the main markets. We feel we have some scope to grow there with distribution coverage. So long as that distribution coverage can enhance and grow the market share that we can operate within. The distribution position in the UK is fairly established. We are looking to consolidate there. And then in the rest of the world, we have strong partnerships in the countries which we're most present, and we're working on new opportunities outside of Australia, New Zealand, and Japan. We get a bit more specific in the indirect route. A key area for us in broadening the penetration of Accoya in mainland Europe is to create finished products. So we'll see a lot of rough Accoya lumber at the factory when we go on the tour. By converting some of that to the simpler applications of particularly decking, we're able to access a much broader range of markets, a much broader range of distribution. And that's a focus really supported heavily by the Accoya color and the appeal of that product and how well it's received amongst the market. And within our focus strategy, some of the detail beneath that is some investment of the past year in Barry, where we make Accoya color to convert that Accoya color to profiles. And that will be supported by the marketing program that we'll look at in a moment. In the UK and Ireland, we have a very strong base of manufacturing customers. We're looking to grow that, of course. We're also looking to increase the share of business we have with those manufacturers through steps we're taking linked into changing regulations on thermal performance and on security requirements for windows and doors, where we feel Accoya has particular advantages, and we can augment that value proposition even further. So our job there is to really grow the share of business that we have in that customer group. And the rest of the world, I'll go back to those 3 countries that we've focused on. They have operated quite independently of some of our activities, and we're in the process of bringing that in now to the wider program, again supported by the digital platform. End user-wise, I think the focus is fairly common on architects. We're also looking, as we bring out the finished product, and on this horizon of 2027, 2030, to develop more in-depth programs to support builders and contractors. That's a much broader web, so it takes more time, but we feel we've got the product to do so, and a product that will carry that through. So now if we just have a short look at the type of marketing we're doing, and particularly in digital, we feel we have a very large opportunity there. We've restructured in the marketing team so that we can have an increased presence in this area. And that is not quite push and pull, but looking at both ends of that channel that we're in. Part of the enhancements are offline, but online to our distributors, portals where our distributors are able to fulfill a lot more marketing requirements, get more analysis of the leads which they're getting. The other side of it is efficiency in generating demand, generating interest, and converting that through our manufacturing customer base to opportunities for Accoya sale. And within that also, we're looking at opportunities to refresh the brand that some of you will have seen has been with us now for some years. And that moves into a bigger area of video content. So marketing, sales, customer service all form the commercial organization. We've worked very hard over the last 18 months since Elena joined on strengthening the team. And as an example, 12 months ago, the North American team was 3 people, each individually reporting to me in Liverpool. We now have Sergio leading a team with sales, marketing, customer service, all based in North America, and combine that's a group of 12 people now who have joined across that period of 12 months. And clearly, they're all developing experience, developing capability, and we're going to have a very effective year in 2025 as we've scaled up now from that much smaller team. Also in Europe, we have room to grow. We're focused on growing the teams particularly in France, in Benelux and Germany, and the German team to look after wider German-speaking markets. And just a couple of pictures there, but to take a moment on those. We really focus the sales team on being in front of the market, getting the Accoya value proposition across, and giving people cause to hold on to it. And that works at the traditional type of areas like a trade show. But I think perhaps the biggest part of our time is spent in workshops of manufacturers, working with them on how they adopt a new type of wood, because it is a very traditional industry. There are objections along the way. There are questions such as which coating should I use? I don't think my glue will work. There's lots of little baby steps like that to take along the way. And we have some very good people in those roles to lead those manufacturers through a process so they understand how to use it. And I think maybe the last point to mention is developing these teams locally. We do have a central base, but we have worked very hard to establish five regional heads of sales across North America, UK, Benelux, France, and Germany. And they're supported by broader teams. And we want to make sure that while we have a model, we always want to be agile and adapt locally to the local conditions. And that's coming into good shape now. So the last slide is just to summarize those points. I could talk unrivaled performance for a long time, but we really do have the leading product there. We operate in a competitive market, and particularly since COVID and since the peaks of demand, it has been a major focus for us to maintain price discipline, to retain price and value, and for that to be reflected in the margins for the business. We've structured the commercial organization quite differently in the last 18 months, and now that organization's grown and is working very well to a common model. And then finally, we have a very clear strategy. We're very focused on generating that primary demand, supporting that primary demand with a solid distribution base, and understanding where we need to grow and how that's going to lead us to our FY27 targets as the first step, that 100,000 cubic meters run rate. So thanks very much for listening. Hopefully you've got a bit more insight into how we operate. Thank you. So I'll just hand over to Rod now.
Sorry. Thanks, John. Well, hi. Wow, sorry. I was given the difficult task of taking this time slot, right? Because it's been after the coffee break, it's after lunch, it's the mid-afternoon. So I get to bring energy. So that's what I'm doing. So when we began thinking about today, we said, well, we can't bring everybody to Kingsport, Tennessee, but we want to show you our site. So we thought the best way to do that was to do that virtually. So we're going to show a virtual tour of our facility. But before I do that, I want to talk about a little bit how the Accoya USA site is aligned with the focus strategy. We built Accoya USA on strong fundamentals in the largest market in the world, which Sergio will talk about in a few minutes. We designed the plant utilizing RM's 15 plus years of operations to make us take in the efficiencies to make our plant very efficient. We're focused on our customers. We are being reliable in our operations, flexible to their demands, and meeting their needs and expectations. And lastly, the Accoya USA team is fully engaged and united to safely deliver the highest quality products that will grow substantially in the North American market. So without further ado, let's go ahead and start the video. So the tour begins in our time lapse of our plant construction. We began plant construction in May of 2022 and completed in June of 24. We started commissioning in July 24, and as Yelena mentioned, our commercial operations began in September. It's nice being on the Eastman Chemical Facility because we will pipeline actually the acetic anhydride from them and then send back high quality byproduct acetic acid to Eastman via pipeline. As you can see, our 9,300 square meter wood hall is being built, and then also our first vessel has shown up, which is our distillation feed tank. You see the structures beginning to build from west to east, the concrete foundations being placed, and you see the steel structure laying there on the ground that will be erected going up on in the facility. You see there's a big gap there in between the pipeline that will bring our anhydride and utilities from Eastman and our structure. We left that there because the large crane that you see sitting there has to drive through there to set the anhydride buffer tank, which will be arriving shortly. You see the tank has arrived and now put in place. Our crane has moved back, and now we're able to close that gap up with the rest of the pipe bridge. The cladding is now going on the side of the wood hall, and inside the structure, we began laying the 12 kilometers of piping connecting the vessels. I must say, during this time, there was approximately 200 contractors per day on the facility. So there was a lot of people walking around. So as we wrap up, as we come around the corner, the first thing you see, here's our finished product. We're ready for expansion with the Reactor 3 reactor pit already there being constructed. The large gap there in the structure is ready for our second anhydride feed tank for reactors 3 and 4 when we get to that point. As we cross over the pipe bridge here, I might note that the acetic anhydride goes from right to left through our process, and underneath all of this structure are our 2 reactors that came from Germany. They traveled over 11,000 kilometers, with all that being on water except for the last 120. The left side here is our distillation section, where we'll separate the acetic anhydride that we don't use and send it back to the front. The acetic acid we purify and send back to Eastman for their consumption. So now we're rendering the wood hall. And this is the final product that you see us, we're in operation now. We do have a fully functioning supply chain with all of our radiata coming from New Zealand, just like Arnhem. And as you go on the left here, here's our raw materials coming in. And on the right, you see where we store our finished packs ready to go to customers. As we move back towards the stacking operation, our stacker is some new and some old, and our mechanics did most of the construction of the stacker. After the stacks are built, they're taking it over to the banding area where they band them and get them ready to go into the kilns. We have 2 kilns, 1 kiln for 1 reactor. We have space for 6 kilns along this wall, which, as Yelena mentioned, we do have room for 6 additional reactors as we grow. Here you see the operator taking a stack of wood off the kiln cart, heading over here to where you see them unloading reactor 2 with finished Accoya, and then reactor 1 they're loading with raw wood for getting ready for the acetylation process. So they'll take the finished product over to the quality analysis area. We'll run our analysis and make sure that it's all good quality, and from there we will take it back to the stacker, where we'll make into the small bundles for Sergio to sell. So one thing you might notice between this and the plant tour you'll be on with Arnhem, we were able to learn a lot from Arnhem as far as how the wood handling and how things moved, and we were able to design for that in our process. So before I do turn it over to Sergio, there's a few things I do want to leave you with. We're 5 months old. I'm much older, but the plant's only 5 months old. It's running well, running really well, actually. Working properly, making great product. In fact, all batches have been A1 specification, so that's been fantastic. Much thanks to the help of the people here in Arnhem, not only the design team, but also the operators. You know, like we talked about, the supply chain is fully functional, going well. We've transformed the supply chain for our customers, so now they can get the product from the USA, but we still have the long lead time of the raw material coming in from New Zealand. But you know, we're very confident in how we're moving forward. We have great partners to move forward with, and we see ourselves growing substantially, which Sergio will take over next. Thank you all very much.
Thank you. So, good afternoon. It's a pleasure being here to share a bit of the sales strategy for North America. I would like to start with a quick recap on the size of the opportunity that we have here. We have less than 1% share in the addressable market for Accoya in North America. The US new construction forecasts for the next 3 years show pretty good rates of growth. Categories like single-family construction house is going to grow 8% in average in the next 3 years. According to Principia Consulting, focusing on our specific markets, cladding, wood-type cladding and decking in North America is a market of $2.7 billion. With our new factory up and running now, it's time to expand our distribution footprint and invest on customer and end user education and product and brand awareness. How we're going to do that? So John has presented our commercial model, and also has mentioned about the team we have in place now with local marketing support, a bigger sales team. So we have worked last year, the second half, and we have mapped all the players in their roles on those different tiers categories. We have designed dedicated mandates and actions for each of those categories, and I'd like to go to more details on each. The first category here is the direct distribution and wholesale distribution. The mandate for this category is select strong partners. Strong partners mean partners willing to invest in inventory to bring Accoya closer to the manufacturers. Partners that pursue large and dedicated sales and specification teams to go after the high-end market in the region. And also partners that leverage on solid relationship with the key players in the building products market. Across the last years, Accsys has built a very good and solid foundation, working with great and market-recognized partners across the country. You can see in the map with the red dots being the current distribution locations across the country. We have partners like UCS Forest Group, Rex Lumber, Hood Distribution, with decades of experience and investing a lot on those dedicated sales team, a co-inventory, and opening new tier 2 or manufacturers and retail lumberyards. We have also recently added some new distribution in the last few months. I would like to highlight the green dot being Warren Trask, opening a new category to us, going after what we call two-step distribution, focus on the retail and lumberyard space. It's there that the decking market happens. Going forward, our short-term focus, you can see clearly in the heat map that the 3 top states in terms of demand for wood cladding and decking is California, Texas, and Florida. We are at this moment in negotiations to open new distributors, second distributors on those 3 states, what's going to improve our ability to get faster to the manufacturers and the next tier level. And this is what I'm going to talk about now. Going to the second tier, our mandate here is grow aggressively. This level is where those customers, manufacturers, sub-distributors, and retail lumberyards are the one converting Accoya to finished product and bringing that product closer to the consumer and end user. Our target here is to increase our number of 125 back in November to 250 in the next 2 years. Just to give you an example, since we have started and deployed a strategy with the local team in November, we have added 15 new customers at this category. I would like to just mention names, recent names like J. Gibson McIlvain, Advantage Lumber, companies that been in the market for more than 200 years, with more than 6 locations across Florida, Georgia, Carolina, both Carolinas, and California. Going to the next level, the tier 3 here, I'm calling, those are the audience that really make the demand happen, so the ones that generate demand. So architects, contractors mainly, and house owners and builders as decision makers. This is where our mandate is boost on education and brand and product awareness. John has already mentioned about the investment that we are doing on our social media platforms, digital platforms, to enhance the customer experience. We have, since December, dedicated resource only to deal with architect space through interactions, lunch and learns, through strengthening the relationship with the big offices in cities like Chicago, New York, and Los Angeles, and also networking with their main associations. Another important player here are contractors, mainly at the decking space. Contractors are the ones installing the product and playing influence on the homeowner decision process. Starting the new fiscal year, we're going to launch a dedicated program to this audience to strengthen our relationship and product and brand awareness on this audience as well. We're going to invest also this year in the main trade shows in America. We're going to be with our team in the International Builder Show. It's the biggest show in the region, end of next month in Las Vegas. And we're going to be in the summer at the American Institute of Architects show in Boston. That's where all the architects, all the different offices come to see what is new in the market. So, in summary, our factory is there, already running and going very well. We have a solid foundation built in the last few years. We have a clear strategy on our channels. We have actions. We have already sat with our partners, distributors, and we have already started that journey. I'm pretty excited and confident that we are going to deliver on our commitments. Accoya in America is top of mind for wood performance in the building product material. And I'm sure that together we're going to make it even stronger. Thank you.
Is there any slide? Oh, thank you. So this was basically all the presentation that we've prepared for today. And before we move to Q&As, I would like to leave you with the 3 basically main messages. While company had some challenging times, we are moving further away from it. We have reset and transformed the company, and also peak CapEx is behind us, and transformation actions are working. That means that we are at the inflection point for growth, for the profitability, and to reach our significant potential. Thank you for your attention, for your willingness to come here and share this beautiful day with us. And with this, I would like to invite my team to come to the stage so that we can start with the Q&A session.
Martijn Indrijver, ABN AMRO, although I have 3 questions and I'll take them one by one if you don't mind. First one is, I guess, for Jelena and Sam together. Now, can you run us through your thoughts in terms of those strategic EBITDA targets? So what have you baked in terms of headquarter costs, pricing strategies, the cost of adding distribution. Can you run us through your thoughts on both the 2027 and 2030 targets? Thank you. That would be the first one.
Okay. Well, let me take that. I mean, really, the numbers that you saw there, which lead to 40 million EBITDA for FY30, that is Accsys Group. That includes Arnhem, that includes Barry, that includes London. So it includes the central costs, R&D, everything. It is the whole Accsys Group. And we in modelling that, we have assumed cost inflation, but we've also assumed operational efficiencies coming through as well through what you heard earlier from Solid Roots and also the operational efficiency Lean Six Sigma type programs in there. So it is what the Accsys Group should look like in 2030.
And in terms of the pricing, can you share your thoughts about that, or otherwise I can ask John? What is necessary in terms of pricing to achieve that market share gain? Do you think you can do that at the current prices in Europe and the US, or do you think you need a bit of a pricing element to move those sales forward?
Yeah, so broadly we're aiming to retain price. We have taken and are looking at some specific actions, specific market applications, but broadly we're working to retain price and to do that through that demand stimulation, that constant growth in demand and developing it that way.
I'll move on. One question for Dr. Steenwinkel. I was specifically asked to call you Dr. Steenwinkel.
Okay, who was that?
And obviously I do that. I was wondering, you put so much emphasis on these patents, but are they really the protection that you need? Or would it be fair to say that even without the patents, given all the capex and the market share that you've gained, the position that you've gained, you don't really need all those patents anymore? Or would it really be a threat if they were to end in the next 3, 5, 10 years?
That's a good question, and I think having intellectual property use to yourself as a company is an important aspect. Of course, it's costing money, and it's always a balance, but there is competition in a market that could also maybe take over this chemistry, this technology, if we would allow it to happen. And especially in countries with low labor cost or whatever, there is a risk. So you want to protect yourself from that risk. Plus, makes you an interesting partner for a joint venture, for example.
So we do have income from the patents and licensing and royalties, etc. So it is valuable for us.
Okay. And then a third question on the commercial strategy. I was wondering, John, can you tell us, are there any countries in the EU that you haven't covered at all yet with distribution partners, and if so, how many? And if you were to cover all your key markets with the same density in terms of distribution partners like you have in the UK and Ireland, which you seem to be considering as what it should be, what are we looking for in terms of numbers? We know the number targets for the US, but what kind of targets should we take into account for the operations excluding the US?
Sam touched on the split there between the US and what will come from Kingsport, what will come from Arnhem. And of that 120, the 120,000 cubic meters on the 2030 horizon, we were looking at 80 to 85,000 cubic meters of that being within Europe. Within the EU, we're represented well in Benelux, in Germany and Switzerland, and developing in France. Nordic countries, reasonably well represented. Broader than that, we have a lot of opportunity, and our appetite for that, we're going to target with the standard Thorn product. We're also going to go broader with our finished offer, because markets within Europe can be close but very different in how they operate. So we're making sure we've got the breadth to cover that. But it's a big opportunity.
But no specific number in terms of distribution partners in mind. That's not.
Not to talk to here. We're really talking to the volume. Yeah.
Okay. I have some other questions, but I'll leave to the other in some room as well.
Maarten Verbeek, the idea. 2 questions. Firstly, you mentioned that you want to reduce your net debt, or you expect to have a 0 net debt by 2030. How much capex have you included in that development?
Okay, so I'll cover that. So I mentioned earlier that really in that period from now to 2030, we're only really focusing on maintenance capex, and most of that actually comes from the annual maintenance stop where we shut down the plant for 3 to 4 weeks, do effective servicing and maintenance. And another routine maintenance throughout the year is typically 3 to 4 million euros per year for Arnhem. It'll be less in Kingsport because it's a newer plant. The maintenance costs are going to be a lot lower. I mean, in terms of growth capex in the next 5 years, I mentioned earlier that there might be individual projects we're looking at, which in any one individual year might be 1 to 2 million euros in itself. And Yelena mentioned earlier in phase 2 about looking at the Accoya colour footprint and looking at moving that into the US, but that is not going to be a significant cost. And again, when you think about that, we would only need to fund 60% of it, which is our share of the JV. So there is no major capex in that period between now and 2030.
So if I understand you well, a possible expansion of the number of reactors in the US, that's not included in this round?
No. I mean, as you know, phase 3, which we touched upon, really, that's when we're looking at significant major capex. And really to put a little bit of colour in terms of the cost of a reactor. And if I look at what the 2 reactors in Kingsport cost, it was broadly speaking about $70 million, so 70. So if we're looking at 2030 putting in, you're probably looking at $35 to $40 million for a reactor. Yelena mentioned you'd put them in as pairs, so you're looking at probably $70 to $80 million at that period of time. But with a reactor operating at full capacity, the cash payback is a little under 2.5 years, which is actually very, very strong given that level of investment. But nothing is in our phase 1 and phase 2 targets in terms of putting any new reactors in. That will be a consideration more for phase 3.
And is it fair to assume that for the moment your capital allocation is focusing on reducing net debt and organic growth, period?
Yeah, absolutely. Yeah.
Thank you.
Sorry, go ahead.
Johan van Over, Edison Group. A few questions. If you look at the output from Arnhem, and I'm more referring to the speech of Hans, 20,000 cubic meters per reactor times 4 is 80. For the full year 30 is penciled in 80 to 85, and you mentioned possibly with a high efficiency 25 each, makes 100. In which time frame we might see you reaching the 100 cubic meters, if ever, of course, everything has to run well?
Well, let me try to break it down. I mean, in the period till 27, 28 and beyond, going from the 80 to the initial 85, which in Sam's bar chart, we're very confident that we can reach that. We've got the efficiency gains, we've got them very well pinned in our mind. What are the specific items? Whether that's a little bit more volume per reactor or a little bit shorter cycle times, those are the things which really get us to that 85 and a little bit beyond. When you go to the next level, you do need to do some extra work for that. I think, talk a little bit for Pablo obviously here, we've got quite clear in mind which components in the process we can address to live to that next level. That will take a couple of more years. Do we get to the full 100? Well, it's science, so you never know, but I think we've got a more than decent feeling that we do achieve that. The 85, we are very confident.
And any capex related to that, or is that part of the?
That's part of the numbers Sam mentioned. It is small steps you have to do. It's more process than capex. Smart thinking.
Another question about the plant in the US. I thought I remember that you previously said that you might reach full capacity within 3 years' time, but that time frame is way before full year 30. And when should you make the decision to expand after full year 30? That might be in 28 or earlier.
we need to make the decision at least 2 years before in order to start with the FEED, which is really the engineering of the new reactors. Do you need one? Are you going to go one, or are you going to go for two? As you saw already in the plan, there is a space. So already the pit was made for additional reactor because it was very convenient to do it during the build of plant. But we will certainly need to have approximately 2 years before actually you start to build and put the reactor up.
Okay. Last question for now is about Accoya color. Can you explain us the difference or the benefits of Accoya color above painting ready Accoya?
Sure. Yeah, the benefits of Accoya color relates to how resilient that color system is in the wood. It took us an awful long time to develop that position. The color goes right the way through the Accoya, and that allows when it can be then manufactured at a later point in the supply chain. So a company can take that rough Accoya gray board and profile it locally to the profile they need, with the color being present all the way through. So there's a benefit there in the manufacturing step. Then when the product goes to the application, compared to a coating can be damaged, can wear off, subject to abrasion, particularly on decking. And with that Accoya color penetration right the way through the timber section, there's a benefit there. In use, of course, also in aesthetics, when a piece is cut in half and the end is exposed, it's colored all the way through. And then the other standout is that you might see the samples at the back and the projects on the slides. The appearance of it really stands out. It really stands out as much more vibrant than traditional coatings, and that's been really well appreciated and demanded. The question behind.
Christian?
Go, Christian.
Thanks, Chris George from Deutsche Numis. 3 from me as well. First of all, on Kingsport, could you give a bit of colour what you think the ROCE will be? First of all, at the current capacity, but also if it's fully expanded as well.
Yeah, I mean, the return on capital employed, the plant's only been operating for 5 months, so it's, the returns will take time to build because it's still in a ramp-up, start-up phase. You're not going to break even in year 1. So, I mean, as we previously mentioned, that the Kingsport will be loss-making in its first full year of operation. As we've said earlier, we expect it to be profitable in FY20 financial year 26. So return on capital employed is going to be very, very low. But as we sort of go towards the end of phase 2, so I would expect the return on capital employed for that business to be at a similar level to our WACC at around 15% by the end of 2030.
Brilliant, thank you. And then just on the EBITDA margin target, 15% in FY30, should we be thinking of that as a sort of a minimum with scope for upside if things go well?
Yeah, it would be.
And if Arnhem's sort of currently at 17%, should we think about the 2 plants being, closer to 20% EBITDA margins in FY30? Is that how we should think about it?
So I'd expect Arnhem to be above 20%, and I'd expect North America to be around that 15. Okay. And then you've got to factor in, when you look at the Accsys group, we've got the central costs as well, and R&D.
Adrian Kearsey, Pamela Gordon. Thank you very much for the presentations. In terms of the inventory levels in Arnhem, you said it was at 4 or 5 months. Should I expect a sort of similar kind of profile for inventory in Kingsport, or is there something different?
Well, we've got in Kingsport the benefit of a shorter timeline to get it to Kingsport from New Zealand. So that helps you. So that's the reason why it could and should be shorter. There's another element which helps you if the reliability I spoke about, more data, more clarity about where everything is in the process, helps you to reduce your stock position. And when the volume of your business grows, i.e. if you go from 60 to 70 to 80, etc., you don't need to have that same percentage of raw wood in stock to your sales volume. So also that shrinks. So you have a number of opportunities to improve. At the same time, we would also aim to become more efficient into our full portfolio of SKUs. We've got quite a lot, so if you can shave some off there, using that specific word, that also helps you.
Okay, thank you.
Jeroen Heijnen, VP Capital. I have a question for Sergio or for Ron. What do you think, or what do you expect will be the impact of Trump's activities on your business?
Make Accoya great again? I really don't have an opinion. I think, well, I guess this is fully opinion. I think you'll see the U.S. be much more business open, business friendly, because we're creating Accoya in the U.S. We won't have to issue with any tariffs and those kind of things. So I think it'll be a very friendly business market, and we'll go from there.
Yeah, I think the same. So I've been talking with main distributors in the last 2 months and make the same question. And we all agree that it's very early to really see what's going to really happen or not. So far, we don't see any impact or any negative impact on our segment.
Thank you.
Yeah, Janja Bongers of De Eng. I have a question about the Accoya for Tricoya and your view on that, because as we all know, Tricoya, the Accoya you sell to make Tricoya has a lower average selling price, so it should be less attractive. But I was just wondering, how do you look at that market compared to selling regular Accoya?
It's a really important part of our business. We deal with a different customer type than distribution through the channels. In the case of Accoya for Tricoya, we're dealing with 2 very large industrial customers. It allows us to tap into a very different wood resource, a different wood basket, and produce product in a different way, a slightly more efficient way. So it does blend itself quite nicely to making Accoya for distribution. You're right, the price is lower. We're focused on maximizing the margin for Accoya for Tricoya through really challenging ourselves to dig deep on the type of wood we can use. We do have more flexibility there, and we're working to optimize heavily and thus improve the margins. So I don't know if you want to add anything, Elena, but we see it as an important part of the business, a really nice complement to the other side, the Accoya business.
So it does contribute a lot, helping us to operate the plant also quite efficiently. It is the product range that is allowing us to work with the zero wood waste, if you like, in the plant. And we are seeing that this market, if you also follow our results, are actually growing, and we are working with our 2 partners. They have established products in the marketplace, and they are building that market as well. It is not going to be so aggressive like when we were talking and had Hull in a whole picture. But Tricoya is certainly going to stay in Arnhem because it helps us a lot in our operations, and we do have a nice established market for it.
Okay, thanks. And the other question is on the more capital allocation question, or on the leverage. So in the picture, you've shown that leverage going down to 0. I think if you calculate, it should be a lot of cash on the balance sheet at the end of December if you meet your targets. But what is your view on a stable leverage level in this business? What's your target?
Yeah, I think really for me, once the financial priority is deleveraging. We do have a large amount of gross debt on our balance sheet, and I think that's causing a drag on the share price. Once we improve profitability, improve margins, improve free cash flow, we will deleverage very, very quickly. From a sustainable perspective, I'd like this business to be around 1 to 1.5 times leverage. And really, if we think to beyond FY30, if we're generating 40 million EBITDA, banks would comfortably lend to you at 3 times EBITDA. So, you might be able to get a facility of, say, 120. If you're 1 to 1.5 times, that is really there to fund new reactors or other large capex growth opportunities. So, sustainably, I'll be looking at 1 to 1.5 times, and I wouldn't go above 1.5 times.
Yeah.
Yeah, Martijn and Drijf for ABN AMRO again. On the same subject, on debt, if you run through your numbers the way you've described them in your targets, wouldn't it be fair to say that it would be better to repay the convertible, owned by some of the people in this room, by the way, because it's hugely expensive. So instead of going for expansion in the US, why not pay off that convertible loan first?
I mean, you've got to look at your maturity profile of your facilities. We have our main current ABN facility expires in 2026. The convertibles go out to 2029. But really, when we do everything that we've just said over the last couple of hours in terms of executing the strategy, why would we repay the convertibles early? Because then the share price will drive upwards and those will convert to equity, in which case zero cost.
Hello, it's Ed Stacey from Cavendish. I sort of wanted to come back to the Trump question, but I know we can't guess what he will or won't do. I'm thinking not of the US particularly, but for the whole group, this whole idea of trade and tariffs, and I was quite excited that maybe they would ban all the Canadian timber and then timber prices spike, and that would be great news for your pricing equation. But I was just wondering, what things should I really look at? Was Canada the right thing for me to be excited about anyway? Are there things that, just what kind of keeps you up at night worrying that might be a bad move that would happen that would damage pricing, or what would be a really great thing? What do you think are the biggest moving parts that are kind of under discussion that might happen that perhaps hopefully hurts your competitors, or anything I need to worry about that would lead to a big flood of timber into some of your key markets? It's a broad basic question, but I'm just wondering what are the real things we should look out for in kind of news headlines that might come up.
John, do you want to say something?
Yeah, sure. As Sergio mentioned, we were visiting the US distributors in December, and it was a topic, particularly with the Canadian distribution group. Wood flows across lots of borders. The wood from Canada that we compete with is the top end of that market, and getting into a bit of detail, but in producing those high-end cuts of timber in Canada, a lot of lower grade cuts are produced, and the sawmills rely on being able to sell those lower grade cuts in order to make the cutting of the premium cuts economical. And the US is the sole large market for that type of product. So one scenario could be that it would become very difficult to produce those prime cuts of timber in those markets. In North America, in the US itself, a lot of wood we compete with comes from South America, from Africa, from Southeast Asia, which may or may not be subject to challenges. So we're pleased to have the manufacturing in Tennessee at this time. Of course, we import wood too. We import wood from New Zealand, but the value of that is a raw material value rather than the finished product. So proportionately, that should be a slight benefit. But we agreed to keep a close view on it with the distributors.
Okay, can I speak?
Yes, please.
So my name is Henk Zinks. I'm from the north of Holland, and I want to encourage you all. I want to give you the compliments for changing the course of the company, so we will be able to have success. So I want to encourage you all to make speed and to go on with the business and make it very successful for all of us.
Thank you.
Thank you. We agree.
Cornelis Bos, Maasruid Management. I've got a question on basically Europe, but also the US. There's going to be a strong increase in expected sales in the US. Obviously, there's a lot of potential there. In the UK, you're more established. I'm kind of struggling why the US should grow so fast compared to the rest of Europe, for instance, countries like France and Germany, where you also already have an established footprint as well. especially Germany, but their growth doesn't seem to be that high. So what is really making it more difficult in these countries?
I think I could join. Sergio and I could cover this one together. Within Europe, we're growing faster in Europe than the UK. We have coverage in Germany. We're not totally covering the market, so there is room there. I think in North America, we touched on how the domestic production makes life simpler for our customers. That we expect some momentum from that. We've had a very small commercial organization in North America as a starting point for the plant. That's now increased significantly. And I think also we have to look at the market. The scale of high-end building in North America is at a much greater level than a lot of the European countries we operate in. And that does suit Accoya. We perform well there. And within high-end, upper mid-end construction, there is more wood used in projects compared to a lot of countries in Europe. So they're all beneficial. I think, Sergio, would you like to add to that?
Yeah, indeed. So just adding on that, for the North American market, as you saw, on top of the commercial space that we are very strong already as a company, so you see a pretty large residential market with the new construction growing the next few years. So those new customers we're bringing that I show you, the new manufacturers being closer and then already having that relationship with the builders, the house owners, that will just allow us grow at the speed that we are planning in the US. That have already started. So I've been pretty busy in the last few months after we start the factory with those distributors, sub-distributors just calling, knocking the door because they know that Accoya is available and produced it locally. So very, very confident and excited with the US market.
And is it possible to actually track the sales increase in countries like Germany and really see what the end markets are doing? Because they tend to be quite traditional markets as well, I guess.
Sorry, Abel, we do track the market factors in Germany and our main markets. We found, and I think you've probably all seen, the construction has diminished pretty dramatically there. We actually see opportunity for growing through that, and I think that reflects the type of customers, also our renewed focus and strategy on making sure we get back to growth there.
Sanne Lebein, Nerissa. I had a question about Accoya USA. We got a very good picture today of how the demand and how the market will develop there. But I was mostly curious about the working capital that's being built up there. You have a 15 million RCF to finance that working capital. Will that be enough to finance the full working capital build up there? And secondly, considering I think you started up operations in September of 24, so in September of 25, the first repayments on the FHB loan will be made. Are you comfortable in stating that there will be no more investment from Accsys into Accoya USA necessary until, we see expansion of the facility there? Thank you.
Okay, let me pick that up. So yeah, absolutely right. You know, the USA does. I mean, it's got an FHB term loan and it's got its own RCF. And you know, as a business has been building up its working capital and effectively funding those initial startup losses, it's been drawing down on the RCF, and you know, we would expect that RCF to be used to be continued to be used by the business. But I also want to point out that, you know, don't forget, you know, Accsys did raise money in November 2023. 22 million of the 24 million gross proceeds raised were for Accoya USA. All of that money hasn't gone in yet. So when we're saying there is money to go in from the shareholders, that is not new money. That is money that was raised from November 23. Yeah. So in terms of the FHB repayments, I mean, the actual repayments start later than September that you mentioned. It's going into 2026. The repayments start, but you know, as the business is ramping up and becoming profitable and cash generative, then you know, the interest payments and the capital repayments will be made by that business. without the need to go back to shareholders.
Okay, so we can expect the entire capital raise that you did in November of 23 to go into Accoya USA. if I'm not
Absolutely.
mistaken.
Yeah.
Okay, thank you very much.
Henrietta Gorlow from Grosvenor. So you've got California as one of your key development areas in the US, and obviously fires are at the forefront of everyone's minds there. So I just want to, I'd like you to talk about how, if there's anything that you might need to do to an Accoya product to get it approved by insurers for rebuild, or if you anticipate any change in building regulations as a result of the fires.
Yeah.
Would
you so
Pablo would like.
I can fill in, or you can start.
You can start. I follow.
Okay, clear. I mean, the fires that happened in California, they will destroy everything. We've seen everything destroyed there. So no Accoya will be built up against it. But of course, Accoya can be an important product for the building industry, and it has to fulfill fire regulations, local building codes related. We have a success there already, and that's what I mentioned, in that we have a WUI pass, which is a wildfire urban interface pass for certain constructions in which Accoya is being used as cladding. That's good news, both for Accoya as well as for charred Accoya, and we're in the process of further developing that. Fire retardant impregnation into Accoya will bring us on par with other wood types that have been impregnated with fire retardants, and that's the other iron in the fire, as we say in Dutch.
Yeah, completing, so yeah, you said the level of fire you have there in California now is no other wood type that will resist. But in terms of the regulations, I would say California is always a moving state in terms of new regulations, potentially being fire or any other type. So we don't have anything now that we see coming new. Maybe it's too early, but it's possible. But if that happens, everyone would need to just try to understand and adjust accordingly. Us and mainly the competitors.
But on the other hand, you also have, I mean, it's a very sad statistics, but the 12,000 homes need to be rebuilt on the relatively short period of time. On one side, you had the fires in California. On the other side, you had the flooding all over the other side of the country. And of course, a lot of homes in US are made of wood. So you know, it is quite. It does also create on some kind of opportunity for Accoya as well.
All right.
Okay. So, thank you very much. I want to thank my team for being on the stage and really passing the Accsys story as we wanted actually to show you today. And thank you very much for your time and willingness to come and be with us here. So we are very confident that plans that we put in place are going to bring Accsys to the completely new stage. And thank you very much for your trust in us.
Thank you.